How would a new White House administration change the crypto industry and affect consumers and investors? What are the biggest developments in AI that we need to be paying attention to right now? Joining us today is an expert on both cryptos and AI. He is Scott Stornetta, widely regarded as the co-inventor of the blockchain. His papers from the early 1990s, such as his 1991 paper, How to Timestamp a Digital Document, co-written with Dr. Stuart Haber, laid the foundation for Bitcoin. Stornetta was one of the few people cited in Satoshi Nakamoto's original Bitcoin white paper. Prior to his work on blockchain technology, he did his PhD at Stanford, and his PhD was the first neural networks dissertation awarded from Stanford University. He is currently the partner and chief scientist at Yugen Partners and the chairman of SureMark Digital Identity Services, which has a very interesting solution to the rising deepfake problem, which we'll talk about today. Scott, welcome to the show. Honored to host you. Thanks for being here.
Well, it's good to be back.
Yes, I had the pleasure of speaking with you several years ago. It's good to reconnect. Many new developments in both cryptos and the AI tech spheres that we can touch on. Starting with politics first, it's interesting because it doesn't always tie in with the crypto industry, but here we are. It's been speculated that the Trump campaign, should he win, would be more pro cryptocurrencies. We can also talk about what it may mean for a Democrat win. But let's start with a possible Republican win first. Is it true, Scott, that the Republicans currently have laid the foundations for what would be perceived as more pro-Bitcoin and pro-crypto policies?
Yeah, unquestionably, yes. And what I think is interesting is because the current presidential candidate for the Republican Party, I'm not going to say the name because you never know when those things are going to change since it's happened so recently, really put a stake in the ground being much more pro-crypto. And what I think is interesting is not only did they take that position, but you really could see a shift, more modest, but still measurable in the Democratic Party's position, I think purely as a maneuvering to the center. And so while I think it would be a pretty bullish outcome, again, not speaking about my own particular political preferences, but if the Republican candidate came into the office of the presidency, office of the White House, I think you're going to see a decided shift that's more pro Bitcoin. And what I really think that means is you're going to see a lot of business activity that has been waiting in the wings in non-U.S., offshore from a U.S. perspective, is going to move into the U.S. space.
Yes.
Yeah.
Please continue if you have.
The other thing, though, that I would say, and it's not strictly political, but there's a recent ruling from the United States Supreme Court that I also think will shift the landscape, and that's the so-called Chevron ruling, referring to one of the parties in the case. But what happened in the Chevron ruling was a determination that shifts more legislative and rulemaking power back to Congress and away from the executive branch. And I think that is going to have particular implications for the Securities and Exchange Commission, because you've seen current chairman Gary Gensler take a fairly ad hoc approach to what some have called legislation by litigation, and taken a fairly broad view of what the Securities and Exchange Commission's areas of responsibilities are within the crypto world. And that, I think, no matter who is elected president, is going to rein in some of the SEC's authority. And so I think no matter what happens, we're moving into a more favorable crypto environment in the United States.
Before we continue with the interview, I want to tell you about another way you can invest your Bitcoins and store them safely instead of using a traditional wallet or an exchange. Consider an IRA. Today's sponsor, iTrust Capital, is one such IRA that offers 35 crypto assets and the lowest trading fees in the crypto IRA space at 1% only. And being an IRA, it also offers unique tax benefits. If you'd like to get started and learn more, click on itrust.capital/David in the link down below, or scan the QR code up here. If you're over 18 and you want to open a new account with cash or roll over an existing account, you can do so using my referral link. And if you use that referral link, you'll get $100 in signing bonuses. President Biden had previously proposed a 30% tax on crypto mining. Do you think, should the Democrats win, do you think that may be rolled back, or do you think that's baked in?
I would be surprised if it weren't softened in some way. Obviously, we've got a new candidate, and the candidate, um, because the candidate is coming in so late into the race, I think you're going to see a couple of efforts to try to take some of the centrist position. And so I think you're going to see a softening of that even in the advent of a Democratic presidency.
At what point did cryptocurrencies and Bitcoin become a partisan issue, though? Over the last, just over the, if you just look at the developments over the last couple of years.
Well, it's interesting, partisan, but slicing in a couple of different ways. For example, I think many would consider central bank digital currencies, CBDCs, a crypto-related issue, and the fact that they've staked out different positions there, I think that also has an effect. Now, why partisan? Because there's a good argument to be said for this. This doesn't need to be a partisan issue at all. But I think it really comes down along kind of liberty and privacy versus regulation. And that, moves towards more traditional Republican Democrat spectrum. Again, I would argue that it doesn't need to be a partisan issue, that there are principles within both parties that should argue in favor of cryptocurrencies, but that's probably going a little too far afield from what we're covering here.
JD Vance, Trump's running mate, has stated in media that he is more pro weaker dollar. He wants to weaken the dollar. And we can discuss how he may or may not do that. But the point is, would this be good for alternative currencies such as Bitcoin? I'm labeling it as an alternative currency. Some speculate it might be. Does it have a place in a weaker dollar environment?
Well, I think before going just straight to Bitcoin, you have to look at stable coins, and particularly those that are still kind of in the second tier, stable coins that want to work towards a basket of currencies. A stable coin that tracks a basket of currencies. I think that could be a minor play for them. For Bitcoin itself, I think it really more hinges on the gradual integration into the global economy. I mean, just the ETFs move that was, again, authorized by Gensler, that just takes us one step closer to being more integrated. And you do have, again, a position that's quite different than when we last had a presidential election, where by some estimates, we have over 20% of the US population as cryptocurrency stakeholders. And so at some point, you move into something that is akin to the too big to fail notion. I'm not suggesting that it's too big to fail, but as it becomes, in the way that people talk about the banking system, but as it becomes more integrated, it starts to have its own constituency that isn't just confined to a few large players, but rather becomes has a broad demographic behind it. And so, again, I think all signs point towards a more favorable outcome for the future of cryptocurrencies in the United States than the past.
This may or may not be a partisan issue, but the future of payments in the U.S. and perhaps internationally, could you see a future in which the dollar may not be the sole payment system in the United States?
Well, in some respects, it already is functioning that way, in the sense that there's more and more ability to convert with less friction out of a given cryptocurrency into dollar payments. So again, that's a little different from the question about, and I know you didn't raise this question, but it's adjacent to what you raised, and that is the dollar as the world's reserve currency. And we have seen some gradual erosion of that over the last several years, but I think that is still unlikely to undergo a major flip anytime soon. So again, I think you're still going to see the U.S. economy and the dollar that it represents remaining the reserve currency, but I think you're just going to see more Bitcoin and other, particularly stablecoin integration into the U.S. economy. So, short answer, yes.
Stable coins, I can understand. Why Bitcoin integrating into the economy?
Well, as people become more comfortable holding it, whether via an ETF or otherwise, the ETFs sort of set aside all of the custodial issues that have created a lot of friction heretofore. Once there's a measurable and a growing amount of assets there, you're simply going to see more mechanisms that lead to better integration into the global economy. People follow where customers have assets, and they create new products and offerings and ways to bridge the situation as the asset base in the United States increases. And I can only see that increasing for the foreseeable future.
I want to talk about ETFs in more detail in just a minute, but just on that topic, do you think that this is a criticism I heard of the Bitcoin ETFs or ETFs of cryptos in general? The Ethereum one is launching this week as we speak. The criticism is this: it runs. It's an antithesis to Satoshi Nakamoto's original thesis, which is that Bitcoin should be a decentralized peer-to-peer payment system. Well, first of all, there's nothing decentralized about it. I mean, the large players, BlackRock, Vanguard, owns these ETFs, and you're not really holding the Bitcoins. It's not your keys. It's not your coins. So what's the point? That's the criticism. How would you address that?
Well, I think you take what you can get, namely, um, half a loaf of bread is better than none. And while I understand that for some people, decentralization and censorship resistance are big aspects of Bitcoin, you have to recognize that there are other players that those aren't the main issues for them. They've come into Bitcoin because they think it's going to appreciate. And for them, it's sort of, and I don't mean any offense to those that are maximalists, it's sort of decentralization, schmecentralization, whatever. I think this asset's going to appreciate, and that's what matters to a large segment now. And so it really is a separate issue to say whether Satoshi's initial aims are to be realized or whether Bitcoin's prevalence is going to grow. Those have forked into two separate questions.
Going back to the election, Donald Trump has said on the campaign trail that he...
And I will also stop Joe Biden's crusade to crush crypto. We're going to stop it. I will ensure that the future of crypto and the future of Bitcoin will be made in the USA, not driven overseas. I will support the right to self-custody to the nation's 50 million crypto holders. I say this with your vote. I will keep Elizabeth Warren and her goons away from your Bitcoin. And I will never allow the creation of a central bank digital currency.
In theory, could incentivize more crypto innovation in the U.S. Let's break this down. All mining done in the U.S. What's your response to this?
Well, I think what he really means is I'd like to get a lot more mining done in the U.S. I'd like to attract mining to the U.S. I don't think he's suggesting that no nodes can be operated outside of the United States boundaries. And I have to tell you that I do enter into conversations with some of the leading mining companies, and it's clear that they're more than willing to bring more mining onshore. If I know this is a U.S.-centric view, framework, I'm assuming, and that this is an international audience, but they're eager to bring more mining onshore into the United States for a number of reasons, and any whiff of favorable treatment is going to inevitably bring more mining onshore.
Okay. On the topic of CBDCs, Donald Trump, once again on the campaign trail, said, and verbatim, he said, I will not allow CBDCs. He will ban CBDCs. Some Democrats have opposed CBDCs, not all. Where do you stand on this issue? Should CBDCs be banned?
Well, again, banning in this case just means I will instruct the Treasury that they will not pursue issuing a CBDC.
Right.
By definition, it's not a ban of anyone. It's an action of the central bank, of the Federal Reserve, whether they're going to move in the direction of the CBDC. I think, quite frankly, this is a misunderstood issue because I think there's quite a bit more nuance in what can be protected privacy-wise and what can't be. And so it's not the make or break issue for me. I understand the deep and legitimate concerns people have about a kind of big brother state where everybody knows where you are moving your money around, and that it is implicit in their arguments that a CBDC would create such a state. But quite frankly, I think those are two slightly separate issues. I think there are ways to create benefits of CBDCs without giving away all of our privacy. I also think that many of the potential benefits of CBDCs can still be realized for consumers, even without the Treasury, Fed, executive branch making a unilateral move.
Here is a pro CBDC argument that I'd like you to address, please, Scott. This is from Congresswoman Maxine Waters, top Democrat of the House Financial Services Committee. Earlier in May this year, she took to the House floor to oppose Bill H.R. 5403, the CBDC Anti-Surveillance State Act, basically a bill opposing CBDCs, and she's opposing that. So she says,
I rise in strong support to H.R. 5403, which would not only prohibit the issuance of a central bank digital currency, or CBDC, but would go so far as to prohibit the Federal Reserve from holding bank reserves that are critical to operating payment systems and combating inflation. Let me start with the harmful implications of the bill's prohibitions on the issuance of CBDC. A CBDC is a type of digital asset issued by a country's central bank, which in the United States is the Federal Reserve. Compared to other digital assets, CBDCs have a greater potential to maintain a stable value, garner public trust, and become a viable means of payment transactions.
can you evaluate this statement?
I think at a technical level, all of those things are certainly realizable. I think that the privacy concerns, which are the major concerns, are ones that can be mitigated appropriately through legislation and technology. And I also think that the notion that a CBDC will chase out other cryptocurrency use is incorrect. I think the attachment points, so to speak, without going into too much detail, of a CBDC to other cryptocurrencies will in fact reinforce the utility of non-CBDC cryptocurrencies.
One more statement from this release here.
There are two main types of CBDCs. One, retail CBDCs that consumers could get from the Fed or a financial institution to pay for everyday things like a cup of coffee, and wholesale CBDCs that would not be used by individual consumers and instead only used for transactions among financial institutions and the Fed.
Can you further elaborate on the differences here?
Sure. It's quite parallel to the notion that banks can borrow,
Right.
Banks can operate as not holding 100% of the assets of the loans they, lend out. They're in a privileged position because of the fractional reserve issues that are associated with banks. And so letting banks be party to CBDCs is really no different in principle than giving them. Banks are the only ones that have to have access to the federal funds borrowing rates. And so this is really, I think, a partial step to say retail customers still have to work through banks. It's really a way of, if you will, protecting the bank lobby. And I think there are some consumer protection arguments that work in that favor, but I'd have to say, just to predict once CBDCs are allowed to operate between the Federal Reserve and banks, it's just another step down the path. And I think eventually banks will have to win on their merits, and people will, if they feel that banks are really just functioning as friction creators or rent seekers, as middlemen, then banks are going to have to give a little there, and we could see CBDCs in a retail sense further down the road.
Some crypto participants have proposed that the government forego a CBDC altogether and just adopt an existing stable coin for the same purpose. What are your thoughts on this?
Well, it's an interesting mix. I think what really wins out is intelligent stable coins need to understand consumer sentiment and the kinds of features they want. For example, we don't have really, in any significant way, interest-bearing stable coins right now, and we could. And so I think the private market, the private space, the private sector for innovating on stablecoins is not going to be eliminated if the federal government sort of authorized one. Money is trying to become more than money, and confining it to what it used to be is only going to create opportunity for entrepreneurs that want to develop the next generation of money.
But what do you mean by that? Money is becoming more than money. What is it becoming?
Well, it's becoming smart money. And there's a fundamental difference between money that is well coupled into smart contracts versus money that is just static, whether it's a CBDC that the Federal Reserve sponsors or otherwise. And so, money is really, right, it's fundamentally, even though we have three pillars for money in an economics textbook: medium of exchange, store of value, unit of account, it's really 80% medium of exchange. That's the thing that moves money. And finding more efficient ways to have a medium of exchange that has additional capabilities is what I would just put under a general umbrella of smart money. And so smart money is going to innovate. It will find it more useful. We'll find it more user friendly. We'll prefer it to dumb money, if you will.
Do you think that these ETFs for Bitcoin and Ethereum, and perhaps other coins down the line, could paradoxically, let's just focus on Bitcoin for a minute, could paradoxically threaten the peer-to-peer currency unit of account aspect of Bitcoin, or unit of payment aspect of Bitcoin, in the sense that if we have large institutions hoarding large amounts of Bitcoin because Bitcoin demand goes up because of ETF demand going up, then these Bitcoins are taken out of circulation as a payment option, and then they're just being hoarded as money or a store of value. What do you think?
Well, first of all, let me come down clearly in saying that what Satoshi built on top of what Stuart and I had done is a great work of genius. Okay, I don't mean to take anything away from Satoshi, but even if we measure him against his own goals, namely the goals outlined in the title of the paper, first, we really don't have cash. Okay, Bitcoin is highly traceable. Okay, we really don't have stable peer-to-peer. Yes, the word peer-to-peer appears in the title, but it is only natural that we see this aggregation of assets, whether in the private sector or wherever. It's already taken place. For the vast majority of users, people are not hanging out a shingle with their own node and trading directly with other nodes. For the vast majority of users, there's already a centralization step that has taken place. And I think that is only going to accelerate. So what Satoshi birthed is a wonderful thing, but it no longer has peer-to-peer characteristics for the vast majority of players. It is not the disinflationary thing that he had hoped for, because it's still quite volatile. And it's not anonymous like cash. So let's be realistic about the great work Satoshi did, but the fact that it falls far short of the initial goals laid out. And so I think the reason I'm spending so much time on that in trying to respond to your question is, let's start with a realistic baseline about what Bitcoin is today, is already. And then in that context, we can look at this question of whether increased centralization will take place, whether it's really more a store, becomes a store of value, which it already has. It really isn't yet. Lightning Network examples and things of their ilk notwithstanding, it's really not predominantly a medium of exchange. Do I have hopes for down the road that things built on top of Bitcoin and other cryptocurrencies will take on more the nature of a medium of exchange and over time a unit of account? I have near to midterm hopes on medium of exchange. Unit of account, I think that's going to be the very last one to be realized.
Interesting. Okay. There's a new development happening. Well, it's not entirely new, but it's happening now. Tokenization of real world assets. Many large financial institutions, including BlackRock, are taking the initiative to tokenize trillions of dollars worth of real world assets. What are your thoughts on this? Is this a move in the right direction, do you think?
Well, I think it's a move in the right direction, but I don't see it happening as quickly as people have been telling us it's right around the corner for the last 10 years. And I don't think it's because of fundamental problems. There are no fundamental technical hurdles, but I think it's just a really slow process, meaning slower than just about anyone that's bullish on this has predicted. The bottom line is if it's convenient for consumers and it gives them an advantage, then it's going to gradually get adopted. Banks and other traditional institutions that hold, real assets are only going to move if they're convinced that it's at least as safe, if not safer, and saves them money. And all of these things are subject to so many sources of friction, legal and regulatory friction, as well as skittishness amongst investors. So that's going to be a long time coming. I don't see that shifting overnight.
Ultimately, I think some people might be wondering, is all of this necessary, Scott? The tokenization of assets, the move to blockchain technology as a medium of exchange. What is wrong with our current financial system that, if you could sum up, could be fixed or remedied by blockchain technology?
Well, it certainly has a promise of being able to move towards more instantaneous or what some call atomic settlement. That could be a good thing, all other things being equal. It certainly has the promise of letting us work in a more frictionless way when it comes to smaller denominations of things. And yet we've already seen, with activities of conventional vendors like Robinhood, that you can get to fractional shares. And so I think it has promised, but it really is not about, for the vast majority of people, making it decentralized and making it censor resistant. It's about, does it cost me less? Does it give me extra features? And there, I really think the ball is still in the blockchain proponents' court because it hasn't delivered yet. Does it have the potential? Sure. But that's thinking like me, a physicist who thinks about, in the long run, what will be possible. As a venture partner investor, we look at companies and ask whether there's something in the short run is going to deliver value creation. And that's why we pass on an awful lot of these situations.
I'd like to pivot now to talk about AI, another subject in which you're an expert. When I spoke with you a few years ago live in Malta, you had made the brilliant analogy of comparing the government's current fears of new technology to an ancient civilization that had banned clocks or the use of clocks because they were afraid of people using clocks as a way to organize revolts. Maybe you can recap that story for us and maybe apply that to today. Where I'm going with this is, Scott, do you think the governments are going to view AI and the emergence of AI the same way this particular civilization viewed clocks?
Well, the reason that I cited the clock analogy, and I'll reiterate it for those that are not familiar, is there are so many technologies. This was just one example that when they first appeared, there were a great number of fears about them. And in the case of clocks, as you stated, there was one country that banned any private citizens from having clocks because they thought it meant that people could then synchronize revolts. And yet, when we look back at that, we say, why should they have been afraid of that? No country in the world is bothered by people walking around with wristwatches. Okay. And it simply puts in perspective that when new technology emerges, it is only natural that we have a number of fears about how it will play out. But the overwhelming lesson of history is that things tend to equilibrate. There's a response to the emergence of some new thing, and that response tends to tamp down the negative effect that it can have. And so what we're doing the same thing with AI. We have a somewhat fearful response, but we ignore the equilibrating effect that we've seen play out time and time and time again. How does it play out in this case? It's the difference between the concerns that would be appropriate if there were only a couple of players that had super AI and everybody else was left at the mercy of that. But this whole open source AI movement is talking about everybody having their own super intelligent AI. And there, the equilibration, because of just simple market forces and incentives, I think goes a long ways to protecting us from one of these big concerns. I think there are three big concerns about AI. One is that our computer overlords are going to take over the world, as Ken Jennings so cleverly stated in the final round of Jeopardy, when the human Jeopardy players lost to the AI. That is just not going to happen. The other concerns are that all the jobs will be taken away. That is not going to happen, and I'm happy to talk about why that's not going to happen. But let me just get to the third concern so that I have them all out on the table. The third concern is we won't be able to tell the difference between what's real and what's fake or synthetic in terms of any digital output. And that, of the three, is the one that is not going to go away. That is going to become ever more a problem. Let me circle back to jobs, if I could, first, because many people, again, without long-run historical perspective, make the argument that if computers can do everything that humans can do, then what jobs will be left for humans? I think it's the wrong way to view it. Think about where we were 200 or perhaps 250 years ago, where essentially everyone was either a part-time or a full-time farmer. You could have made the argument that when all the things that people do can be done, meaning mostly agriculture, can be done better by machine, what will happen to all the farmers? And yet here we are with 3% unemployment rate. Somehow the fact that only 1 in 100 people covers agriculture, directly involved in agriculture, hasn't prevented new jobs from being created. And so it's not the fact that computers will become better and better at doing all the things humans currently do, but there's a failure of the imagination to think that there won't be new jobs created that allow humans to do something in ways that are desired. And why is that? It's not about a race against a machine. It's something far more fundamental, and that is disposable income. As long as people have disposable income, they will want to find new ways of spending it. And that's where job creation really fundamentally for the long term comes from. Yes, will there be disruption and dislocation in the space? Yes. But as long as there is disposable income, there will be new job creation.
Let me just address one concern, if I may, about this labor issue here. Back during the Industrial Revolution, which you were referencing, humans weren't facing obsolescence overall, in the sense that yes, you can move from a farm to the city and work in the factory because that's where new jobs demanded you to move to. Now, what's happening is we have people like Elon Musk, for example, claiming that by 2026, artificial general intelligence will be smarter than any one human on the planet, meaning that in theory, robots and AI could just replace humans in all matters, in all jobs. And so it's not a matter of we're changing from the farm to the industrialized city. It's just in all sectors, we will be outcompeted and outperformed and made obsolete. What's your response to this concern?
Well, first of all, there are so many things that I admire about Elon Musk, but that doesn't mean he's always batting 1,000%.
Sure.
I think it's a mischaracterization of the situation. What the initial competition is between those humans that know how to effectively use AI and those that don't. And so the simple first step to take is to start using AI personally to leverage your employability. Okay. Next, if you're talking about AGI in 2026, you're really not talking about extensions of large language model in any way, shape, or form. Okay. I think a much more sensible voice in that space is Jan LeCun, who points out through many, many well-grounded arguments why AGI is just not something around the corner. Having said that, I want to go back on even more fundamental ground, that just because something can be used by a human to outthink a human that is not using it does not lead to saying that an AGI, even should it emerge, okay, is going to be superior to a human and an AGI in combination. I just not going to happen. And again, we think, oh, but this time is different. This isn't the agricultural revolution. This isn't the industrial revolution. This is the take over the humans revolution. But it's not the way job creation flows. As long as there's disposable income and someone that's willing to try something different, okay, there will be job creation.
Okay, so on the topic of AGI, can you just maybe describe in layman terms how AGI is different from a normal AI? And in your opinion, if 2026 is too aggressive an estimation, roughly when we could see this being used in commercialization?
Well, again, I am certainly not at the level of expertise of those that have been practicing in this space, particularly for the last 12 years and not 12, 15 years. And what I'm really talking about is the revolution that occurred with so-called convolutional neural networks. But it is the case that I worked in this general space many years ago, and you can see the limitations of these systems. They don't learn rapidly. They don't learn in one-shot ways the way humans learn. They are still at a stage that is easily thwarted. They don't generalize the way we think about generalizing. They don't adapt to new tasks in the way that we adapt to new tasks. But again, I'm really trying to say something more fundamental. And I know it's frustrating when you talk to someone trained as a physicist who's really only concerned about long-term outcomes to say, but what about this that's just around the corner? Long-term things equilibrate. There will always be a role for humans that want to leverage the new technology versus just the technology on its own.
What do you think of the prospect of superintelligence, a concept whereby a computer has intelligence, quote unquote, intelligence that greatly surpasses any one human's cognitive abilities? In theory, this system could solve really big problems that we currently don't have answers to.
Right, but we're already in that situation. our reliance, our dependence on computers to solve all sorts of problems, has gone so far from a pencil and paper world that we're already in that situation, and we frankly don't feel all that threatened. There's a long running joke in the AI space about this concern that when computers can do this task, then that'll be really different. And the joke is that as soon as computers are able to do that task, then people say, well, that's not really AI. It's this next moved goalpost that really constitutes AI. And, it's not because people in the past were unintelligent. You can read these quotes from Turing, for example, surely a fairly intelligent person. And he felt that what computers would be able to do just around the corner was going to so change the nature of what it meant to be human that, doomsday was on the doorstep in the late 40s and early 50s. And you can go back every decade through some of the most leading and intelligent AI researchers, so-called, and have them predicting that just around the corner, it's all going to change. Well, here we are with 1 trillion times more compute power, and yet we're still, it hasn't changed. And so at some point, you have to say, maybe there's something fundamental people are missing about human nature and their interaction with machines. And I think that comes a lot closer to predicting what this next go around is going to be like.
Well, the third problem I'd like to address, the third problem of AI, which you said may not go away, is the problem of recognizing what's real from what's fake. Now, you're working on this right now. You are currently the chairman of a company called Suremark Digital Identity Services. Deepfake is a problem, Scott. It's happening now. It's happening to famous people, politicians, fake Trump videos, fake Biden speeches. How do we tell fake from real in the future?
So again, AI deepfake started out as a bit of a joke, just kind of fun. You see the Pope, the Holy Father in a very puffy white parka, and everyone gets a giggle out of that. It becomes much more of a concern. I know I'm just recapitulating part of what you said, but I want to tee up this so I can answer the question in the right framework. Becomes much more of a concern, not only when politicians are deepfaked, but when journalists reporting on politicians are deepfaked. And there's a concern that there'll be such a flood of deepfake that we'll all just kind of throw up our hands and say, you can't trust anything. And while there are attempts to use AI to detect AI, I think that's sort of missing the point, because legitimate players are increasingly going to use synthetic creation to create new digital content. We thought photoshopping was going to destroy the world, and yet here we are. And everyone is airbrushing the wrinkles out. I think the real issue is, do I know who created the content? Who is willing to take responsibility for the content? Because that person can develop a track record, and we can decide whether we think that content authorized by that person is trustworthy or not. And I do think that that is the larger issue. And that's why I'm proud to be backing Suremark Digital, which is really about being able to run to ground the issue of who did and did not create a particular piece of digital content.
Okay, so how does this work? How do people know that this interview is real and I'm not deep faked?
Well, it's really interesting that you raise it, because one thing I haven't discussed with you is when this interview is over and you've created the final version.
Yes.
I like the courtesy of being able to authorize it. Doesn't mean that I approve of everything that's in it, but it means that, yes, it was me that was in this interview. And with a Suremark credential, I can do just that. Okay. And it will allow viewers to know whether Scott was a willing participant in this interview.
What is this, like a digital signature you can see on the screen, or
Well, it's definitely a cryptographic mechanism that Stuart Haber and I have developed that's being moved into commercial production by Suremark Digital. It certainly involves asymmetric key pairs that allow one to sign work, but the real issues have to do with how you know that the person that holds the key pair is the authentic person, and secondly, how you know that the content remains valid and legitimate as it moves across the internet. And we think we have a fairly robust solution to both of those issues.
Okay, so in practice, how does a consumer solve or mitigate the problem of deepfake? You're looking at
it will put a consumer in the position to be able to be confident that the key pair assigned to a particular individual is actually that individual. And it will also allow a consumer to freely validate the content against that source.
Visually, is there any difference on the screen? Let's say I'm watching something on my phone, an authentic interview versus a deepfaked one.
Yes. Again, don't think of it as a watermark, which can easily be faked, but rather thinking about it as an algorithm that can be run by the consumer in the background that validates the proof of authorization.
Okay.
And, visually what you're going to see is up in the toolbar, basically a yellow light that says there's content that claims to be authorized by this person. Do you want me to check it? And then if it checks it, it either produces a red light or a green light.
Are there any developments in AI looking forward that you're excited about? Positive developments, new applications?
I am super bullish on AI to be able to greatly enhance our individual capabilities for creativity. I'm super bullish about all the good that can come from AI. I have very few reservations about problems, such concerns as the so-called singularity event. I have very few concerns about that. These are, when Apple first brought out the Macintosh, and I'm, making my age evident, we bought in the very first year one of the first Macintosh computers, my wife and I, and they had a program for software development in the educational setting, and the slogan for it was "Tools for the Mind." I think in another 5 years, we'll look back on what large language models are doing today, and we'll say, it just turned out these were just additional tools for the mind.
Final question. This is a kind of a fun out there question. Are we living in a computer simulation, Scott?
No.
No? Okay. What? I'm curious to hear your...
But as long as I can choose my actions, what does it matter?
This is getting metaphysical. We'll close it here. But how do you know your actions are chosen and not pre-programmed?
For the same reason that it too, deep down, that you have your agency. You have multiple examples of it, and no one is saying, well, since I have no agency or choice, I may as well just go take a nap.
Yeah,
it just doesn't happen. Okay.
Fair enough. Scott, it was a pleasure to speak with you once again. Where can we follow your work? Tell us where we can learn more from you.
Well, obviously, my Suremark certified Twitter and LinkedIn feeds are a good source. And again, if people are at all interested, just one of the things that we're working on in our portfolio, but they may want to take a look at suremark.digital.
Very good. Thank you very much, Scott. I appreciate you coming on the show, and I look forward to speaking with you next time.
Right. I look forward to signing off on this video once it's done.
Yes, that would be fun. And thank you for watching. Don't forget to like and subscribe.